Ladies and gentlemen, good day, and welcome to the Q3 and 9-month FY26 results conference call of Shera Energy Limited, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, we welcome you all to the conference call of Shera Energy Limited. From the management team, we have Mr. Naseem Sheikh, Chairman and Managing Director, and Ms. Jyoti Goyal, Company Secretary and Compliance Officer. Now I hand over the call to Jyoti Goyal. Over to you, ma'am.
Good afternoon, everyone. I hope you all are doing well. It is my privilege to welcome you all to the Shera Energy Limited earnings conference call for the first 9 months of the financial year 26. I am Company Secretary and Compliance Officer of the company, and today I will present a comprehensive update on our financial and operational performance, outline the key developments during the period, and share our strategic priorities and outlook for the business going forward. The first 9 months of this year have marked a phase of decisive execution and accelerated momentum for Shera Energy. We have not merely built on the foundation laid over the past few years. We have strengthened it, expanded it, and converted it into the tangible growth. At Shera Energy, we are a focused and integrated manufacturer of non-ferrous metals, including copper, aluminium, and brass. Our products are extensively deployed across critical sectors such as transformers, motors, and electrical cables, underscoring our relevance in core industrial and power infrastructure value chains. Over the years, we have built a fully integrated manufacturing platform that spans the entire production cycle from melting and casting to extrusion, drawing, and finishing. This end-to-end capability strengthens our quality control, enhances cost efficiency, and reinforces our ability to deliver consistent, high-performance products at scale. On the backward integration front, we are in the final stage of commissioning our copper cathode facility in Zambia. This project will significantly enhance raw material security, reduce import dependence, and strengthen margin resilience. Commercial production is set to commence shortly, with phase 1 targeting an annual capacity of 1,200 metric tons and an estimated revenue potential of approximately $12 million. This marks a critical step towards securing upstream control and improving profitability. Simultaneously, through forward integration, we are aggressively expanding into higher value-added segments such as electrical conductors, superfine wires, and solar ribbons. This strategic move positions us closer to end-use applications and enables us to capitalize on the accelerating growth in renewable energy and power infrastructure. Collectively, these initiatives establish a seamless value chain, transforming Shera Energy into vertically integrated, globally competitive force in the non-ferrous metal industry. During the first 9 months of FY26, we continue to make steady progress across our strategy priorities. Shera Energy Limited has enhanced its capacity for electrical conductors and superfine wires, reinforcing our forward integration and widening our product mix. During 9 months of FY26, we delivered a strong financial performance, reflecting steady growth across all key metrics. On a consolidated basis, total income increased by 30% to rupees 1182 crores compared to rupees 909 crores in the same period last year. EBITDA rose by 55% to rupees 66 crores, while profit before tax grew by 57% to rupees 34 crores. Net profit stood at rupees 25 crores, registering an increase of 57% year-on-year, and EPS improved by 49% to rupees 8.01 from rupees 5.36. On a standalone basis, total income was rupees 759 crores, up 21%, with EBITDA at rupees 30 crores, up 44%, PBT at rupees 12 crore, up 38%, and net profits at rupees 9 crore, up 32%. The growth in profitability reflects higher operating efficiency, a better product mix, and an increased contribution from value-added segments. Looking ahead, we are entering a very exciting phase of our journey. Our immediate focus is on scaling up the Zambia operation from 100 metric tons at trial stage to 5,000 metric tons annually over the next few years. We have planned a capital investment of rupees 300 crore to rupees 500 crore for this expansion. We expect the backward integration through copper cathode production to improve our margins by 15% to 20%, while our forward-linked business such as conductors and solar cables are expected to add another 7% to 10%. Alongside, we are continuing to invest in technology upgradation, product innovation, and operational efficiency to ensure sustainable growth in the years ahead. Thank you all for your time, help, and continued support.
Ma'am, shall we start the Q&A session?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants, you are requested to use handsets while asking a question. Further, we kindly request participants to avoid asking repetitive questions so that the management can address queries from all participants in the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask a question. We will take the first question from the line of Priyanshu Maheshwari from Holani Venture Capital Fund. Please go ahead.
Good evening, everyone. Congratulations on the good set of numbers. Sir, while we were going through the results, we have observed that the consolidated revenue have remained relatively stagnant over the past 2 quarters, being around 390 crores. But with the increase in the copper and aluminum prices during the last quarter, why the revenue has remained stagnant, whereas the cost of material consumed has increased by 7.5%. Does this mean there has been a decline in the volume of the company during quarter 3?
Good evening, gentlemen. First, I would like to congratulate you on the quality of question that you have put. But I would like to correct you in terms of raw material consumption, where you have put that there is an increase in 7%. The 7% increase is in price, and that is reflected into your stock. If you look at into the consumption, where we have consumed the raw material is 88.94% as compared to previous quarter of 89.91%. And if I compare 9 months we have our consumption of raw material is 89.76% against last year's consumption of 91.40%. So this replies your question first. Second, in terms of sales, you are asking me that it is stagnated. No doubt there is a substantial increase in the price of raw material. This has been constant for this financial year. And last quarter, there had been abnormal increase in raw price. That has resulted in a slight decline in our quantity growth. That last preceding quarter, we had a sales of around 6,862 metric ton of goods for the quarter, which in last quarter of December, it stood to 6,618 metric ton. So there, if you see, the decline is only by 240 tons around. But if you compare this performance as Q1, our sales was 5870, which now stands at 6617. And if you compare for 9 months for this financial year, we have touched 20,401 metric ton, which against last year of 17,708 metric ton. So there is an increase in terms of quantity sales over 9 months, but if you compare Q3 to Q2, definitely there is a drop by around 2 to 3% in terms of quantity, and which is not reflected in terms of sales because the sale price has slightly gone up.
Mm-hmm. Can you please repeat what was the total volume in during 9 months FY25?
FY25, 9 months for this FY25, total is 20,401.62 metric ton. All right?
This is for 9 months FY26?
9 months, yes.
Okay.
9 months up till December, from 1st April to 31st December. And last year for 9 months was 17,708.60.
60. Mm-hmm.
Okay?
Understood.
So there is a growth of roughly 12% in terms of quantity as compared to last year. Q1 stood at 5,870.68. Q2 stood at 6,862.22. Q3 stood at 6,617.56. I hope I have answered your query.
Sure. So just one more thing. We have also seen there has been an increase in the finance cost of the company during 9 month FY26 when we compare it to 9 month FY25. I mean, has there been an increase in the debt? On what was the debt taken for? If you can just explain and dive through what was the weighted average cost of debt? What was the end use of that debt as well?
So it has a combination end use. Since I have told all my investors that company is in expansion, is doing their investment into Zambia for its copper cathode production. So the debt has come as long-term money also for our investment into the Zambian operations. And if you compare last 9 months performance, it stood at 1,177 crores, which was 906 crores last year. So there has been 30% growth in terms of top line. That has consumed some of our working capital, short-term borrowings, and some portion has gone into our overseas investment for our backward integration.
And what would be the average cost of debt, sir, for all the new debt that has been taken?
Average will land somewhere lower than 10.
Understood.
Thank you. We have the next question from the line of Krish Mehta from Nirbhaya Asset Management. Please go ahead.
Hello. Good evening.
Yeah.
So when do we expect the Zambia production to start? And how much EBITDA level contribution do we expect in Q4 and FY27?
As I have already informed my shareholders that last month we started our production and it was on a trial basis. And we made roughly for month of January, we did one small lot of roughly 10 tons around. Now the company I have further taken into some corrective modes, some more corrections in terms of recovery and in terms of productivity. that investment is currently going on, and I expect by end of February or first week of March, we will again take second run of our production. So our production will stabilize. We will have some sales in Q4 of this year, but stability of the entire production will happen into coming first quarter of next financial year.
And how would you describe the working environment in Zambia, specifically the reliability of power supply and availability of skilled workforce?
Currently, for last few months, there is sufficient power into Zambia. This is the rainy season into Zambia, and Zambia production is mainly by hydro power generations. So right now we are not facing any challenges in terms of power, and I expect this thing to continue up till May, June. Post that, lot of solar investment is coming up, and we are also into dialogue with one of the solar company, and that's a Canadian company, and soon we will be into JV for getting 24/7 power through that investment, and that project is coming very close to our investment where we are.
Thank you. And one question in the line of CapEx, as you said that you may intend to raise CapEx of 300 to 500 crore. So do you plan to dilute equity in the future?
Definitely, that will be done post our smooth operation in terms of commercial that is expected to start in first quarter of next financial year. After 1 quarter of smooth running, that is the time I am going to request for raising up the equity into our raising the equity as well as some part in debt for our further expansion into Zambia.
Okay, thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We will take the next question from the line of Mithun Mehti from MMM Capital. Please go ahead.
Good afternoon, sir.
Very good afternoon.
Sir, my question is with regards to the initial calls where we highlighted that we were supposed to do forward integration and where we are supposed to sell wires to our customers, and we are supposed to get some machines. So are we proceeding towards that area, or we have just focusing towards the Zambia operation?
Very good question, and very good to remind it to all the investors on the same question. I would have been, we are in process of procuring the machines. The machine procurement has almost been done. The machines have already arrived from China now, and now we are in phase of installation. So I expect in phase manner we will be starting our commercial productions on this investment, and as we start our commercial production, we will be keeping all investors updated through exchange. So machine procurement has already been done, for which the term lending has already been done. The disbursement of term loan and everything has already been done. The machines have arrived into India. They are in our premises now, and step by step we are on the process of commissioning it. As we commission it and we start our trial runs, we will keep our investors posted on the date of commencing the production.
Great. My second question is with regards to this the winding wires which we sell. Are these winding wires useful for the higher voltage transformers like 765 kV or 2000 kV, or it's basically useful for the lower voltage transformers?
As of now, whatever we are producing is in mid voltage range.
Okay.
And this is the reason we have invested into our new capex, where we have already procured the machine. In EHV grade transformer, the winding is called CTC conductor they used, continuously transposed conductor. So that machine we have already procured. The commissioning is going on, and I expect by start of second quarter of this financial year, we will be into commercial production of this production for 765 kV transmission lines.
Nice. So in that case, our EBITDA per ton will increase drastically. So may I know?
Definitely, you can see our EBITDA lines are constantly growing. If you see on year basis or quarter-to-quarter basis, so I can tell you last quarter, our EBITDA was 21 crores. Now it is 24.92 crores. And so we are improving on our figures on year basis. And if you compare to last year, which was 9 months, was 42, which now stands at 66. So there is a substantial growth in our EBITDA, and our forward integration is going to add up to our EBITDA lines, and our backward integration is further going to add up to those things.
Great. So this is my last question. How is the cash flow reflecting this year? Last year we had a negative cash flow because most of the things are getting invested, or we have receivables, stuck in receivables. So this year, how would be the cash flows reflected by any chance?
It's going to improve, sir. As the profitabilities are going to improve, everything is improving.
Okay. Last year we had, as in for FY25, it was negative from operating cash flows. So I was trying to understand.
It is not negative.
Okay, great. Okay, that's it, sir. Thank you. Really appreciate it, sir.
Thank you.
Thank you. We will take the next question from the line of Dhanraj Tolani from Kirin Advisors. Please go ahead. Dhanraj, please unmute your line and proceed with your question. Due to no response, we will take the next part.
Hello?
Yes, sir.
Am I audible?
Yeah, very much audible.
Yeah. So I have one or two questions with me. So I'll just start with the first one. So revenue growth has been good, has been strong. So I just wanted to know, this is mainly from the volume growth or copper price pass-through, like the realization?
It's a combination of both, gentlemen. So if you see our capacity utilization, last year for the whole year, the capacity utilization was around 73.65%. For this 9 months, we have already utilized to 79.58%. So there is a volumetric growth as well as the price growth. On an average, annually 5 to 7%, there is a annual average price increase into all metals, and that definitely adds up to our balance sheet. But the quantities that is also adding up, it's a combination of both the growth.
Also, what was the for this quarter? What was the EBITDA per ton if we compare YOY or even Q-on-Q? What is the growth in that, per ton?
So if I have given you the EBITDA figures for this quarter was 25 crores around, and this quarter we did a volume of roughly 6,617 metric tons. So it's a simple arithmetic calculation that we can do.
Yeah. Also, I was looking at the financial part. So I'm seeing the YOY growth in other income has increased almost double, 2.3 crores to 4.6.
That is the result. You see, the investment that we are doing into overseas operations, some portion has gone as equity, and major portions we are lending in terms of debts. So whatever investment is going there, against which the company is raising long-term debt here and is being deployed as a long-term debt into Zambia. So here the interest cost is increasing, which is substantiated by the other income that is increasing into our Zambian operation.
So that is how it must be, the finance cost, it must increase.
It has to be accounting system. You cannot square it off. So income you have to highlight separate, expenses you have to highlight separate. So if you see from Q2 to Q3, there is a growth of 1.3 crores of interest cost. That is majorly going into the investment into Zambia. And if you see the other income from 92 is going to 263. So that is the revenue that is generated against this investment.
Got it.
Yeah.
Okay. Thank you, sir.
Thank you.
Thank you. We have the next question from the line of Paras Teta from Purple Bond Vertex Ventures LLP. Please go ahead.
Yes, sir. Thank you so much, sir, for this opportunity, and congratulations for a strong set of results. Sir, just wanted to understand our outlook now for FY27. What kind of growth are we expecting for FY27 in our Indian business? That's the first question.
Okay. So the growth, looking to our investment into forward integration as well as into backward integration, I expect a sizable growth in the company. But I shall not be in position to comment you approximate figures. But these investments, whatever we have done, will be into production within first quarter of this financial year. So the revenue growth on these investments are going to come up, and they are going to add substantially into the coming financial year.
Understood, sir. Right. So, sir, and just on the margins for EBITDA margins for now. So for the last quarter, we saw about 5.62% broadly EBITDA operating margin. So what is the expectation for FY27 on a sustainable basis?
Sir, if you see corresponding EBITDA for last financial year, for the corresponding period, 24 to 25 December Q3, EBITDA margin was 4.51%. Then if you see the preceding quarter, it stood to 5.49%, which now is 6.24%. So
for the current quarter,
Pardon?
For the current quarter, you mean to say is about 6.23%?
For the last quarter, last 3 months. Current quarter, I am not authorized to tell you.
Right.
So last quarter, whichever results we have published, the EBITDA margin is 6.24%. For Q2, it was 5.49%, and it was 4.51% corresponding Q3 of last financial year. So there is a constant growth in EBITDA. If you compare it to 9 months also, last year 9-month EBITDA stood at 4.72%, which now stands at 5.61%. So there is a growth of roughly 1% over last year in terms of EBITDA.
Right. So for FY27, do you expect this EBITDA margin to sustain?
I am not only expecting, but I am rather more confident looking to our investments coming up into forward as well as backward integration. These investments are going to improve the EBITDA lines of the company.
Understood, sir. Fair enough, sir. On the Zambian front, sir, right now we are in the trial production stage. So I presume commercial production may probably pick up, as you said, maybe from Q1 meaningfully.
Yeah.
So, sir, what kind of, an indication of a sustainable margin on that Zambian capacity? As of now, we've got 1,200 metric tons.
Let me tell all the investors again. Let me repeat the story of our Zambian operations. The investment that I am doing is I have taken charge of a already existing second-hand plant that was closed. So I have made investments in rectification of the machineries and whatever it was not running. In January, I started our production on a trial basis, and we made roughly 8.6 metric ton of copper cathodes. Then I stopped because the recovery that I was expecting to get, I was just reaching there. But I found there are further scope of improving the recovery in terms of increasing the profitability in the company. So I have taken a break of roughly another 1 month, where I am modifying the plant setup. I am redesigning some process plan so that our productivity and our EBITDA lines increase in into that investment. So if whatever I am proposing and whatever our team is doing, and once we are into commercial production on that, which I expect to start in first week of March, that will help the company to attain a EBITDA line anything above 15% plus.
All right. And so all the modifications are being done now, and you think first week of March, the production
First week of
should
March
start.
and second trial production will start.
Right.
And whatever we are, actually, this is a new technology for Shera. It is a new hydrometallurgy, which we are also learning with our experience. So as I see how the machines have behaved and how the process have gone, we are auditing it on process to process basis. There are more than 17, 18 processes that involve into making copper cathodes. So against our internal audit, wherever we find there is some slackness into efficiency in operation, that we are addressing in phase manner. So I expect complete streamline will take another 2 to 3 months, but second run of our plant will commence in first week of March.
Right. And potentially, commercial production will take another month or two, maybe?
We are going to start our commercial production, not more, it will not be more than a month or so.
Okay.
It won't be more than that.
Fair
We
enough.
have already made major investments. Some changes into, you see the flow charts. So
Right.
there are blocks. You have to arrow the blocks. This one first, this one second. Second one goes seventh goes first. So the process control has to be there. So some changes in the process is continuously going on.
Right.
So that we will be doing very soon.
The process improvisation is happening. No,
Definitely, you can call it, just to improve our recovery in terms of copper content, what we get in ore. The better recovery you get, the better EBITDAs you make.
Right, sir. Sir, I just joined our call a little bit late. So I just heard that, you're looking at a capex of about 300 crores odd, probably mostly, I think, in Zambia. So, I mean, if you can just explain the timeline and how and when do you anticipate in general?
So just wait, I will answer you in our next annual con call on that. I will be in position to give you the tentative dates when we are going to plan our funds. Let me streamline my operations first.
Right. And I mean, just in case if that happens, what kind of capacity are we looking at in Zambia then, in case if we move forward?
It is quite premature to say in terms of quantity growth, but the investment will be in a range that within 1 year, whatever capacities we have, we multiply by minimum 5 to 10x from here.
Right. Understood.
Yeah.
Understood, sir. And generally, the demand environment is broadly okay in terms of, let's say, the copper. I mean, of course, there is strong demand for copper cathodes by anyway, but just your perspective on that, sir. I mean, where do you anticipate that?
Whatever we made 8.6 tons is already sold. Although as per me, China quality was not that good to be sold, but people pick copper like anything. They are picking copper like anything.
Right. There is strong demand.
Very huge. Copper is always in shortfall.
Right, sir. And hopefully we are looking at migrating to the main board in the next couple of months, broadly.
We are eligible now. 17th February 2023, we got ourselves listed into SME. 3 years we have already completed, and we are in process of completing the formalities for the migration process.
Right, sir. So hopefully the institutional participation improves eventually, so that will be good for the company. Fair enough, sir. Thank you so much.
Definitely. Thank you. Thank you, Parash. Thank you.
Thank you. We have the next question from the line of Priya Jain from Green Capital. Please go ahead.
Hello, sir. I'm joining your con call for the second time. The last time also I was there. So I was going through firstly, very congratulations for getting this great set of number. You are almost, hitting FY25 full revenue.
Thank you, madam.
Yeah. So also, a lot of buzz is going around this metal industry, which is actually now going to be a hotel release. How do you think that company's valuation is going forward? Currently, you are at 300 crore market cap. Where do we can see, say, right next 3 to 5 years?
Madam, market cap is not the race that we are into. We are responsible people to scale up the operations, take care of the money for our investors, give them better returns. Market cap and everything is dependent on the valuations that people do outside the business. So definitely our numbers are good, and looking to peer industries, we have a sizable numbers now, and definitely market will be eyeing on that. And I expect the market cap is also going to improve.
Of course, we are going to report good numbers, and investors will get attracted, and they actually eventually they look up to the company's valuation. So my question is not only that, where we can see Shera going forward.
Madam, as I have been always committed for our growth, and it's almost 30 years of my working into this line, and I can say Shera is going to multiply at the rate what we have been doing for last 3-4 years. Our multiplication is going to be further into multiplication numbers. So very soon the top lines company I am expecting to scale up to 2x within 2 years. So everything is going to scale up. Yeah.
Also, any guidance for FY27?
Madam, as the investment that we were supposed to do, our project is on time and we are rather working on this. So new capex, we have done roughly 60-70 crores of new capex, which definitely will start giving revenues in the second quarter of coming financial year. And so backed by those and the natural growth in terms of 7 to 8%, and Shera Energy's standalone growth of 5 to 7% in terms of quantity, I expect the growth to be in the range of 40 to 60%, anywhere in between.
Fair enough, sir. I'm looking forward to the update. That's it from my side.
Yeah. Okay.
Thank you. A reminder to all the participants, you may press star and 1 to ask questions. We have the next question from the line of Surya Narayan Nayak, an individual investor. Please go ahead.
Hello. Am I audible?
Yes, you are very much.
Yeah. Hi, Nasim sir. Congratulations for a great set of numbers and great set of window in Zambia to set up refineries in the copper cathode. So just my questions and the realm of understanding is related to not to the profit and loss account, or let's say working of the books, rather than the capacity built up that is going on since over the years in the downstream, as you are looking at the upstream at Zambia. So to understand what kind of color is available, color of revenue is available for FY27-28. So what I am checking your capacity built up is that your aluminum intensity is going off, and slowly from ever since in FY23, your copper intensity is going down. whereas brass is nearly so and so at around 16%. I mean, if let's say if I can give you the numbers, capacity, aluminum is around 47%, copper is at around 37%, and brass is at 17%. And you are fairly attaining the EBITDA margin in relation to the industrial peers of around 5 to 6%. So there is no problem on that. So my understanding is that now the growth that is visible in the downstream is looking at the utilization of around close to 77% in copper for FY26 exit, and aluminum around 82%, and brass is almost 90%. So we don't have much room in the aluminum and brass, rather there is some room in the copper side. So is my understanding right that now we have little bit room from 75% or to maybe 90% in the copper?
Mm-hmm.
And looking at your industrial peers, starting from let's say Precision to KSS to Ramratna Wires to Vidya Wires, everybody is in the range of around purely copper area around 37 or minimum 35,000 tons per annum. So we are nearly halfway through. So what is my understanding that to what extent you are trying to scale up the downstream copper facility in India, entering into different areas of the energy sectors or industrial sectors, or let's say consumer sector or auto sector. So those are the sectors you are interested, and where is the capacity built up? I'm not seeing in the copper downstream.
Surya bhai, I think you are exhaustive analysis person. But this, you are good at your job. What I am good is at my job. I am least interested in what my peer industries are doing. I am rather more interested what my machines are capable of, how I can streamline my processes, how can I substitute the copper with aluminium growing demands, how fast I can switch over from one metal to another metal, how fast I am compatible to match the industry demand before it comes into picture. So Shera is one of few players in India which is present in all three base metals: copper, aluminium and brasses. You won't find Precision into aluminium. You won't find KSH into aluminium. And what is the beauty in Shera? You need copper, we have. You need aluminium, we have. So whatever the customer, I give this option to the customer to decide what he wants to buy. If my customer is looking to the price, the copper is going up, he wants to switch over to aluminium and take the technology supported by aluminium, we are there to support them. So I have designed my production to support my customers at every time. You would have never seen, since you have studied our company for years, so you would have never seen a quantitative decline or any decline in shape of trajectory in the company. Metal prices go up, sometimes aluminium has the pressure, sometimes copper has pressure. So we are not people who can handle the international pressures into metal. We are here to operate at the market pace and market demand. So I have designed my operations in a way which suits my customer, not dictate my customers. So I hope I have made my point clear, and the process how I want to make my company friendly to my customer.
No, that's right. I mean, let's say my point is that we are at nearly about 300 crore market cap, and we are aspiring to.
What is more important for me, gentlemen, is what is my growing EPS, what is my growing returns to my investors.
I'm coming to that point, sir.
Yeah.
Because the point here is that we will be doing the EBITDA margin at par with the industry, but unless and until we touch more of the copper, the costliest among the base metals, our absolute
Gentlemen,
EBITDA.
for your kind reference, I am telling you, copper does not bear higher EBITDA.
I'm not saying absolute, I'm saying absolute EBITDA.
Absolute EBITDA is okay, but I have to design my production as per what my customer, whatever I'm making has to be bought back by my customers. So what is the market design? I have designed my plant and my machinery in a way I can switch from copper to aluminum within no time. So if you see,
shall I mean that the kind of capacity we are having, so those are quite fungible and irrespective of the metal demand?
Since I am a technical person and I have designed my plant, my machines are suitable to run parallel in conjunction either with copper, either with aluminum. I can switch over my production just by changing few things, and my machine can operate into copper as well as aluminum.
Okay. So if that is the case, then when the industry is actually looking at more of the copper intensity, so what is the issue in our case in reaching out to customers, or our customers are not interested in us so far as copper is concerned, but they are more interested in aluminum?
Every manufacturer, not only in India, across the globe, has its own customer bank. The customer bank that Precision has may not be the same that I have. And what I have, it's not necessary that Precision will have that. So I am taking my cup of tea, they are taking their cup of tea. Since you are not part of this business, you are analyzing as an analyst. So you are asking me such questions. But looking to my industry, if you see Q2 to Q3, the copper sales have declined by 400 tons against 2,400 tons. Last quarter we did 2,000 tons. But whereas aluminum we increased from 33 to 450 around, and brasses we increased by 10 to 20 metric tons. So our process is such that we can change looking to the market demand. Last quarter, there was huge abnormality into prices. LME went from 10,000 to 14,000. So market is not going to absorb 40% hike into prices immediately. You are getting me? So I'm not waiting for the market to correct. I'm correcting my machines and pushing more onto aluminum those days. As the prices become comparable into copper, we push our more production into copper. It all depends on market dynamics and forces.
Thank you. We have the next follow-up question from the line of Paras Data from Purple One Vortex Ventures LLP. Please go ahead.
Sir, just wanted to understand in terms of our working capital plan. Are there any further plans for little bit optimal reducing the inventory a bit, or improving the working capital days? I mean, that was question one. And what level of debt do we expect? Short-term borrowings, I guess long-term borrowings is more or less sort of constant for us. But for short-term borrowings at the end of this financial year, broadly. So, I mean, any plans also therefore to reduce interest costs?
My plan is not to reduce the short-term borrowing of the company. My plan is rather to increase my business.
Right, sir. So, by the end of this year, what level of short-term borrowings do we broadly expect? So, I mean, September was about 160 odd. Short-term borrowing. So, what do we sort of intend?
It's almost in the similar levels. Almost in similar levels.
More or less similar levels.
Yeah.
Right, sir. And sir, I mean, in general, any plans to improve upon the inventory holding? I mean, the working capital block that is there in inventories, can that improve further from here on?
In inventory holding, we are maintaining roughly 60 days of stock, and we are maintaining that.
Right. So I mean, to curtail that would be difficult because I guess some of the other peers might have
For
little
a
bit
growing
lower.
company, you see, other peers, they are doing only one metal.
Okay.
We are doing 3 different metals. So we have to manage sufficient level of inventory for our process requirement. We are recyclers. Our peer industries are not recyclers. We do our recycling operations. We do melting. We do alloying. We do nickel-based alloys. We do tubes. So you cannot compare just one product inventory to another peer industry as a complete inventory. You are getting me? Shera is a group of company that if you club all those groups, then you will be able to compare our inventory. Precision does not have any recycling business. They don't do any aluminum business. They don't do any brass business. They don't do tubes. You are getting me?
Right.
So they do just winding wire. Winding wire is one of our products. It's not the only product.
Right. So, sir, across the metal, go on, sir.
So, our process is very much aligned with many other companies. Like now we are going in our cathode production. Now our balance sheet will have some impact of inventory levels even with Hindalco, even comparable to Vedanta. That is a different mining section. But when you see the inventory, it will come as a whole. So Shera is one of the company pan-India that is into mining, recycling, into winding, into alloys, into tubes, into strips. You won't find any other company doing all these things at one go. Sure.
Right. So, I mean, when we work across 3 metals, right? I mean, and various products, and not only winding wires, does that give us better diversification? And I mean, the reason being, are we cyclically better protected?
For you, it is very easy to comment on that. I am into industry. I am into day-to-day working in purchase, production, and sales, and our expansion. And we take our decisions on a management level, which is suitable to the company first, which is suitable to the market, and then which is suitable to add our profitabilities, improve on our EBITDA lines, improve on our EPS lines, and improve the horizon of the company. We don't look into others, what they are doing, how they are doing. We are least bothered on that. I look into my business, what is required for my business, what is good for my business, how I am going to improve, how I have to scale up my operation.
All right. So just one final query. In terms of our Zambia operation, as of now, what is the actual capacity that we have? And,
the initial installed capacity of that plant is 100 metric ton, which I expect 60 to 70% of its utilization capacity very soon in coming first quarter of this coming financial year. And as we achieve and we sustain to 70% of our installed capacity, then I am going to invest further to increase our capacities there.
Right. So, I mean, so as you said, so this capacity increase will take some time once this 100 metric ton per annum gets stabilized and utilized well. Because
first quarter it will stabilize, and coming second quarter and third quarter, you will see new investments happening into Zambia.
Right, sir. So only last query, mine. Okay, in terms of, the size of the company that we have, as of now, let's say about 300 crore market cap, and we are, sort of having plans of another 300 crore of capex. So it's quite a significant and big plan, and of course, if the EBITDA margins are 15% plus, it makes sense to do that. But just trying to understand how will we fund it? That's the only thing that I have. I mean, once the EBITDA margins are established, it's pretty clear that one should go with that kind of a capex.
When the time comes, everything will be planned and it will be executed.
Achha.
Yeah.
Understood, sir. So that was the only thing. I mean, given the size, otherwise I think it.
Don't you worry. The company has a good support in terms of debt raising also. The banks have a good trust in the operations of the company. We are a 30-year-old company having good relations with our investors and the banks. And as and when I see now it is a time for doing this capex, I expect the money will not be a challenge or a problem for our investment.
Fair enough. So just last query, we said potentially at least we are targeting, as I heard on the call, our revenue could probably double in the next probably 2 to 3 years. That's right.
Yeah.
So
that is also I'm expecting very soon.
Yeah. So I'm saying the EPS also, therefore, should be equal to that or maybe better, given the margins will improve.
Pardon?
So if the revenue doubles probably in 2 to 3 years, right, and the EBITDA margins will gradually improve. The Zambian operation will also stabilize, and Indian operation also now becoming even more efficient. So given that is the case, the EPS, of course, there will be some dilution based on this thing, but will the EPS also most likely double in 2 to 3 years?
You can expect so.
Yeah. Okay. So that was the only question, sir. Fine.
All right.
Thank you so much.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. And with that concludes the question and answer session. I now hand the conference over to Mr. Ronak for closing comments. Thank you, and over to you, sir.
Thank you for joining the call of Shera Energy. If you have queries, you can write to us research at kirinadvisors.com. Thank you for joining the conference.
Thank you, members of the management. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your lines. Thank you.
Thank you, everyone. Thank you.